Hello, good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in these videos, we are watching at the market. We are looking at the market to see what happened yesterday, what was moving the market, what is going on in the market, and what we have to expect from today's financial and economic data. As you know, and as I repeatedly told last days, the main focus yesterday was on Mr. Powell and Miss Yellen's testimony. And that was the time that we were waiting for the volatility in market, and this is what happened as you see in the chart, this US dollar chart. What happened in the US dollar chart, it is exactly showing what Mr. Powell told, increased as he told that we may even end the bond purchases earlier than before expected, before, faster than earlier expectations. But we have to discuss it in a December meeting. So this is what's the market. The last days, the reason that US dollar was decreasing, you can see here in what our chart. The main reason that it was moving the market to downside last days was the expectations from Fed policy. The expectation was that because of the latest variant of the coronavirus, we were, sorry, the market was pricing on the market participants were pricing on uh, slower changing the policy. So we were not waiting to see the fast improvement in the tightening policy. So that okay, the Federal Reserve will go ahead slowly and step by step. So therefore, we have to see the Omicron will put the federal the Omicron is the name of this latest variant. We were waiting to see that the Omicron will put the Federal Reserve in a holding policy. But yesterday's Mr. Powell speech comments about earlier ending the bond purchases was hawkish tone, was the tightening tone in the conversation, and that was the reason we saw that suddenly increase in US dollar index. And then when we saw this fall right after that was the reaction to his next comment about that okay, but it doesn't mean that we have to increase the rates as well. So, I mean, ending the bond purchases is different with increasing the rates. So that was the reason that we saw that we saw the US dollar again fall. I mean, right after increasing again, they lost the ground like half of what it was gained, like in 10 minutes. This is what happened yesterday in the market. Miss Yellen also was warning everyone about the debt selling, and the debt selling that in the last time that the Senate was talking about that they continue to budget till mid-December, and mid-December again they need to agree on something to be able to continue the government during the holiday, New Year holiday. Otherwise, it's going to be the shutdown, and you know what happened when the government shut down. So this is what happened yesterday in the market. Yesterday in Mr. Powell and Yellen's testimony. But besides that, as I told yesterday, the focus about the economic data, we had the consumer confidence data yesterday. The consumer CP consumer confidence fell to 109.5, much lower than expectations, much lower than previous numbers. It was disappointing to see the consumer confidence at this level for November. It means that the consumer, whatever, actually the number was even before hitting the latest variant, but still the consumer say this number is telling us that the consumers feeling is not that much positive. It's not the positive about the economy, and they don't feel or they don't like that they are not okay with that situation in this situation. So that was the reason to see the consumer confidence in very low levels around the 109. That was CB consumer confidence reason to see that there. Uh, Also, yesterday we had another economic data from GDP. Canadian GDP was not as good as expected. Italian and totally the Eurozone inflation was increased by 4.9% yesterday, the fastest reason, let's go see here. I will explain you. Where's the chart? This Euro USD here we go. This Euro USD chart. You see that Euro USD yesterday increased sharply here. The reason was the European inflation number. European inflation number yesterday at 4.9 shows that the inflation in Eurozone in November raised or increased faster than ever. Actually, not ever in the last 30 years, which is kind of ever for Eurozone. But anyway, the Eurozone inflation increased more than 4.9% in November, which is the fastest inflation increase in Eurozone since the 90s. So it's the last 30 years. So this is that was the reason when it was that so like it just increased the expectations for hawkish policies from European Central Bank ECB, which means that the euro will be in the stronger position for the short in time. So that was the reason to see euro USD increasing. But however, this sharp movement in the US dollar chart put the euro USD under pressure, and we saw that the euro USD falling again recovered. Totally, the Euro USD Euro USD movement is depends on the next week's central bank's decision about monetary policies. Till that time, it will be probably slight movement around this, since that we don't have that much important events before a European Central Bank meeting. And German unemployment rate, on the other hand, was the positive and fell to 5.3% from earlier 5.4% with 34,000 new job created in November. This is what generally would happen. I mean, the market again. The reason, as I told, that yesterday these days still we have these days totally this week we had when we will have forward too many economic data, but main focus will be on the news from this coronavirus to see what the coronavirus will do in the market. Yesterday also we had the API American Petroleum Institute weekly report as well, which showed that let me bring the crude oil. You see that the crude oil increase here. This increase was after report of the API weekly report that shows that U.S. Inventories, crude oil inventories in the private section fell by 747 thousand barrels last week for last week, comparing with market expectations of 1 million, 1.6 million. I mean, market was waiting to see for more drop in petroleum inventories and petroleum totaling oil inventories for the week ended 27 November. However, it was decreasing a little bit less than market expectations, but still they increase this movements. You see that the market, this news, it was actually right here to put the oil a little bit under pressure, but still as we know, the latest in Asian season. Today in Asian season, the market a little bit rebounding from earlier from year low, and this was a little bit helped by the GDP from Australia, but still again was under pressure by Chinese manufacturing. So the data is kind of, this market's moving up and down because the data that we had, it was a little bit again like if you compare the data is like some positive and a negative data, right? They're coming right after each other. The oil, totally, the oil we see like let's say like that. The oil that generally will be waiting for OPEC meeting, December 2 and 3, tomorrow and the day after that. We have the OPEC Plus meeting, and the oil market will be waiting for that. We have to see the results from the meeting to be able to decide about the market next movement. We need to see the reaction of the OPEC Plus members to the latest coronavirus variant. That will be the sign for the market to see where it goes. So it was about the oil, and also today we will have the EIA report as well. Yes, today earlier also we had the Suxin or Chinese private section manufacturing purchasing manager index. That was disappointing to see the number under 50 at 49.9, which is kind of telling us that the market is not as good as it was expected, and even the manufacturing section, we were waiting to see some weakness, and we saw the weakness in the service sector. However, this weakness in the service sector was not good enough to see the negative impact in the market. And now today we had negative impact from negative numbers from a manufacturing sector as well, which is not positive for the oil market, however, in generally. But still, if it was not about the OPEC Plus meeting tomorrow, we could see the oil be a little bit more under pressure. But with the OPEC meeting tomorrow, market will be a little bit caution and waiting for the meeting. And the stock market, Mr. Powell and Mr. Yellen's comments on the Senate was disappointing for the stock market and put them under pressure. As you like, just like about the stock market, uh, as I was telling in the last days, we have too many reasons to see them under pressure by year end. No matter if it could be because of, I mean, even if the virus variant is increasing, sorry, and becoming the main concern, so it will the market will be under pressure. If it's not, as Mr. Powell yesterday told in his comment, economy is improving amazingly, and this amazing improvement in the market will put the Federal Reserve to have a little bit more hawkish policies and decisions. So that is again the reason that we can see that the stock market would be totally under pressure, and this pressure, no matter in just SP 500, this pressure you can see in the Nasdaq yesterday. That what happened in the general movement. Also, it's in a side movement with the downtrend tendency, and you could see this side movement in a clear side movement in the Dow Jones. So the Dow Jones and SP 500, Dow Jones and the S&P 500, they are in a clear downtrend, and the Nasdaq is moving side movement. It has a side movement with downtrend tendency. This is generally what's happening in the market. In the cryptocurrencies market, we didn't have, and we don't have today also so far we don't have any important news that can change the market attitude. But still, the market is patient and waiting. We'll be waiting for more news and data from other the firm economic calendar for more data and news to decide where it goes. So generally we can see still generally what is in the market. I am still on the side under the downtrend more for the crypto markets, and see that more pressure than seeing them on increasing side. So this is what the generally, because of, as I told you, because of the regulation stuff, regulation decisions. So far we can see still the US dollar in the stronger position. Whatever happening in the market will put the still US dollar in demand. So US dollar still will be still in demand. Gold will have a nonsense movement. As I told, the gold is locked between the negative and a positive, negative and positive signals. But however, under 1778 will be under pressure for much lower levels. It's depends. We see that if we can close and we can end the day next day also under this level. This is generally what's happened and what's happening in the market. Hope it was useful for you guys. Don't forget about leaving the comments, leave the comments, and let me know what is your idea about these videos and what you want me to cover more on the next day's video. See you guys tomorrow. Bye bye.